Hello, it's my pleasure to connect with you via this live stream session, which is recorded and available via LinkedIn, YouTube, and Facebook to discuss the development and trends in the market surveillance space in Asia. Some of the topics we'll be talking about through the session are what's the big challenges firms are facing when it comes to trade surveillance and market abuse monitoring, how technology such as AI, machine learning, data and analytics, and reliable data are helping regulated institutions manage their compliance costs and needs, and what firms should be thinking about as they develop their market surveillance program, either to meet regulatory requirements or best practice. My name is Chris Young, and I head Asia Enterprise Sales for Refinitiv. This is an LSEG business. Refinitiv was formerly part of Thomson Reuters, if you didn't know, and it's been in the data business as long as there's been financial data. So I'm very pleased to present this session to you. I'm the host for today's session, and I'm pleased to be joined by Chris DeNigris, Director, Product Marketing, Compliance at NICE Actimize. NICE is a US headquartered company and uses technology to identify financial crime and providing regulatory compliance. So Chris has over 20 years of experience in financial service technology, spanning the buy and sell side, and he's responsible for the go-to-market strategy of the company's compliance solutions. This includes holistic surveillance suite SurveilX, which analyzes and correlates trade-related data. Now, I've had the pleasure of working closely with Chris and the wider Asia-based NICE Actimize team these past few months, as earlier this year, NICE and Refinitiv entered a partnership in Asia, whereby NICE's market abuse cloud solution is nourished by Refinitiv data. With that said, Chris, firstly, welcome. We've seen a spate of headlines in recent years regarding a variety of crimes, such as insider trading, within institutions where people have been able to engage in these sort of market abuses as a result of inadequate systems and controls. This prevents those firms identifying and reporting suspicious activity. So with fines in Asia globally on the rise, running into the billions each year, this could be spoofing, layering, insider trading, front running, and more besides. And this isn't just global banks, it's impacting crypto exchanges, online brokers, wealth managers. Can you tell us about what NICE Actimize sees within the current trade surveillance landscape and how it compares in Asia to the US and Europe?
Absolutely, Chris. And first of all, good to be with you, and look really excited as well about the partnership between our respective firms. I'm really excited about what we're going to be able to do together for our customers in the region. But to your point, yeah. So, I think when you look at the landscape of surveillance, even back the last sort of 5 years, if you kind of pull back, America's known for the big ticket fines. There was a study that was done that looked at, again, the last 5 years across the three major regions, and America's had, I believe, it was 200 fines totaling about $8 billion in that period, whereas in APAC, you had 350 fines totaling about $7.4 billion. MEA was about $2.5 billion across a much lower number of fines. So the net of it is that, look, in APAC, most of the countries that we do business in take compliance seriously. And we certainly see market abuse, insider dealing, spoofing, price manipulation. It's active everywhere, and the bad people are everywhere, and so regulators are very active in all of these markets, and there is a need for surveillance in every region. And so for us, we see growth from a number of areas in the Asia region. You have international institutions that want to operate in a compliant way in each region that they operate in. So if they move, if it's a US bank, for example, they move into Hong Kong to set up an operations there, they need to be running their business in a very compliant way. So that's one area that sort of drives drives the need for regional, local surveillance in the region. The other area we're seeing growth is in the emerging markets, where they're really trying to establish themselves with a reputation of solid infrastructure, right? critical for, if you think about, you mentioned the online brokers, crypto exchanges, even on the buy side, where reputation is really important, right? A major headline issue can tarnish a firm, sometimes cause irreparable damage. And so they can't afford to get it wrong. And so, we're seeing those two areas really as being big pockets of growth in the APAC market.
Okay, thanks, Chris. And are there any particular surveillance challenges that financial institutions in APAC are facing?
Yeah, I think so. I think the topic we were trying to focus on was really around trade surveillance. But we think about market abuse, detection, misconduct. We do look at even communications related data to be able to manage or to detect market abuse in a lot of cases. And I know we're going to touch on that a little bit more. So language is challenging, right? Just in general, you have many regions, many different dialects, clearly different languages, many different dialects within those regions. So covering those can be, from a surveillance perspective, right? You have to transcribe, getting that accurate. You even have language switching sometimes within calls. That can be a big challenge. So just the accuracy of the communication related data. APAC was much more, it was much faster to adopt new channels of communication like WhatsApp, WeChat. We really saw a proliferation of these sorts of channels that have challenges, certainly, whether it's encrypted or whether it's, very protected communication channel that have inherent challenges. Another big challenge is around data. So, when you think about exchange data across many of the different regions, you have many exchanges that can be very challenging for firms, financial firms that need to do have market access in each of the regions that they operate in, which is why we're really excited about working with Refinitiv, right? So we're going to help really provide industry leading data with SurveilX, which is our holistic conduct surveillance suite, and really help them with a major challenge of data quality.
Okay. Thanks, Chris. Yourself and NICE Actimizer are in a really sort of unique position to see big trends that are happening within the sort of market abuse space. I mean, is there anything that Asia firms should be on the lookout for that may not have come to this region just yet?
Yeah, I mean, certainly, I'm sure we've all seen the headlines out of the U.S. With the SEC and FINRA. There were some big fines. And one of the things that was quite unique about this series of enforcement actions was that they really it seemed as though the regulators were really trying to make strong statements about the importance of capturing communications related to transactions and also being able to monitor that data regardless of where the conversations happen. So whether it was on those typical off-channel devices, personal mobile phone, and across those different channels that I mentioned, like WhatsApp and WeChat, the regulators in the U.S. particularly, and I know most people listening are going to be in the APAC region, but these regulations tend to creep across jurisdictional lines oftentimes, and so we saw some relaxing of enforcement during COVID, right? So certainly regulators were giving some cover, some allowances for what they needed to do from a capture, recording, and monitoring perspective of communications. But then once some time had passed, regulators really expected firms to be operating in a compliant way, doing business in a fully compliant manner, regardless if they were hybrid or not. And so when we saw the enforcement actions come out, and some of them, by the way, were from issues that were going on years prior, even before COVID. But it certainly accelerated during COVID when the regulator came out with these sort of standard cookie cutter fines, $200 million a piece. And those were tier one banks. There were smaller fines in the tier two bracket, but we're still talking about tens of millions of dollars. That's trying to make a statement that really they're trying to stamp out some of this egregious behavior, negligence, if you want to call it. And one of the regulators actually coined that it was clearly negligent on the part of some of the senior staff within the bank that knew some of these conversations were happening off channel. So that's just one area that I think we're going to see in all regions. This need to be able to monitor and surveil. Why do I say that? Fundamentally, and I know, again, we could touch on this more, our view within NICE Actimize, and we work with customers all around the globe, is that you need the communication data to be able to do effective market abuse detection. That's the conduct piece of the puzzle. Regulators understand that now. They know there's tools to capture and monitor the trade-related conversations. And if they don't have it, then they can't look for the misconduct. And so, having 100% coverage is just something that the regulators are not really going to put up with. And we see that, we think that's going to happen in all regions.
Okay, Chris, interesting. So further question to you is it fair to say that market surveillance is really or trade surveillance is really focused on the sell side? Or is this really a phenomenon that's spread now to the buy side? And is there pressure on the buy side, wealth managers, online brokers, crypto, to really up their game and their diligence in this space and or from a best practice standpoint to get trade monitoring in place?
Yeah. I think it's fair to say that we see different drivers for adoption on the buy side still than we see from the sell side. But in many of the regions we do business in, we do see the regulators coming down quite hard on the buy side. And we've seen examples of that really across all regions. Many firms that we talk to on the buy side, they want to ensure that they're compliant. So if there are specific requirements, they might not be on the radar in the same way on the sell side from the regulators, but they also want to ensure that their reputation is intact. So again, I go back to that headline risk for the buy side is higher, and they have potentially more to lose. I mean, nobody wants to be fined, obviously, when we see some of the size of some of these fines. But if you're a global tier one bank, $200 million, man, that's a lot of money. But in the grand scheme of things, that's a drop in the bucket for some of these global banks, quite frankly. But for a buy side firm, the damage of a fine plus the reputational damage can be really problematic, and it could frankly put the business at risk. And so we are seeing firms starting to get ahead and think ahead. Hey, if regulations do become tighter, or regulators really start to look at buy sides more actively, we've seen that in the Americas. We see it in the UK with the FCA. If we see that happening, we want to get ahead of that and make sure that we're in a position to really have our infrastructure ready so that we don't have any slowdown in our business operations. Okay.
Good message. In my research for this, I've come across EY coining a phrase, the ABCD of successful surveillance. So A equals accuracy, B equals breadth, C equals culture, D equals data. So out of these elements, what is it the most important for firms to focus on?
I thought it was going to be the ABC of selling. This is the ABCD of successful surveillance. I like that. Is there an E option or everything? All of the above? No, I think quite honestly, these four that you mentioned, I think they're all. So it was accuracy, breadth, culture and data. The one that comes up for us all the time is data. Now I think interestingly, when we look at our approach to surveillance with SurveilX, we look at three sort of elements or pillars, if you will, of how we think about the process of effective surveillance. So there's capture, there's detection, and there's investigation. So, and put in another way, it's the data you need to capture and cover the analytics and the way you're going to analyze that data, and then what are you going to do to act on that data, right? That's sort of an oversimplification of the surveillance workflow process for us. So I feel like that aligns nicely to what you just shared from E&Y. But at the end of the day, when we talk to customers about the things that they struggle with, it continually comes up that it's, we need clean data, and we need it to be, easy to deal with, reliable sources of data, that comes up time and time again. So I guess I'd have to put data high on that list, but I think all of it is really important, right? You have to have the coverage, but you also need to have really strong analytics, and you need to have the right tool to be able to bring all the pieces together to run the investigation process. But it all starts with data.
Well, Chris, I might touch on the data side of things just a little bit more down the track, just to dig into that a little bit more. But just generally, when we're talking about trade surveillance, how can we ensure that for firms it's not just a simple box ticking exercise, but they're actually understanding, identifying, mitigating risk accordingly, that they get a real benefit from this, and it's not just box ticking?
Yeah, sure. I think that the goal of the regulators, what the regulators are after, is conduct and culture. I think we see many of the regions where regulators are expanding their scope, right? If you take the FCA, for example, and their expanded scope with SM and CR, I mean, that's really a signal to increase the obligation of senior managers to ensure that their entire firm, not just regulated employees, but the entire firm, is acting in a manner that creates no systemic market issues or issues with customers. And so, and there can be some real serious penalties in those cases. So what I'm getting at is that we're seeing this expansion of regulation where it's kind of broadening the scope. What was, okay, you need to have a series of detection models to look for insider dealing. You need to put in some surveillance for communications, and you need to kind of run your standard lexicon list. You need to have your market surveillance, and you need to have some models that are sort of trying to do their best. To now, what regulators are really after is, how much are you actually managing the conduct within the business? How much are you really able to detect all forms of misconduct, right? So that you can get ahead of issues before they show up as bigger issues. And so I think we see that firms are starting to take much more of a proactive risk-based approach, where they're not just putting in a surveillance tool with standard out-of-the-box models, but they are looking at a way to look closer at, well, okay, employee conduct, employees are really where the risk lies. So we need to look at employees as potentially as an entity that we need to be able to understand the riskiness of those entities. So we're starting to see much more of that now, which is, I think, encouraging, because it's also going to help firms stay ahead and ensure that they don't that they spot things before they get out of hand.
Okay, predictive in nature, getting ahead of the curve.
Yeah, exactly.
Okay, and artificial intelligence, machine learning, buzzwords sometimes that people drop into, any business case at the moment. But for your business line, how prevalent is AI and machine learning? Are we leveraging these technologies to monitor trading activities?
Yeah, we are. So we tried to, in the past, I think, and I think the broader market also tried to push the AI and ML acronyms on people too much. I think recently we have actually brought to market some really exciting use cases for AI and machine learning. I can kind of touch on two of them with you and your audience. So one is around just understanding communications, right? So we refer to this as natural language understanding, NLU, and it's a form of machine learning that can actually take in sets of communications data, again, through the context of trade surveillance. We're using this for accurate communications as it relates to trade so that we can do things like automated trade reconstruction. And so what we're able to do now in very sophisticated, much more accurate ways is to train these transcription tools to be able to accurately detect firm-specific communications that's related to the various trading activity. So another way of thinking that is a specific bank in a specific region has a certain language that they speak. They need to be able they're going to need to set up this AI toolkit to be able to understand the language very quickly. And we have tools now that can do that can take in, we call it few shot learning. We can take in very small data sets and train these transcription tools to be able to understand language. And then we can thread that into, where it's really exciting is we're threading that into the trade related data to be able to do the automated trade reconstruction. What typically takes 3 months, we can do in a matter of minutes for customers once these models get tuned and once they're up and running the right way. The second use case, I'll be brief, is predictive alerting. And what we're doing is also very exciting. One of the biggest problems we hear from customers is they're inundated with false positives. And so what we're able to do with machine learning is applying it to the way analysts are dispositioning alerts. So we're actually looking at we build historical benchmarks for the way analysts and the types of alerts that analysts will disposition, right? Call a false positive, label a false positive, and the system is learning this, and we'll actually apply a score, a confidence score to the future alerts based on checking against that historical benchmark. And so it really is a game changer, because now surveillance teams can ring fence alerts that they think that the system finds to be more likely to be a false positive. Doesn't mean we have to auto close those alerts, but it means you can ring fence them, put them to the side in a different queue, and you can deal with those differently. So it's bringing a lot of efficiency into what was formerly a very task intensive, quite overwhelming process of dispositioning alert factories.
Well, you seem very advanced and sophisticated on that score. Look, I just wanted to touch again. You mentioned data as being one of the most important elements of trade surveillance. Clean, reliable, accurate data. Can you comment on what's important? Well, A, to you as a surveillance vendor, but B, also in the regard of clients around this?
I think, sorry, Chris, I think for us, the old adage of garbage in, garbage out, so for us, if we have clean, reliable data, then it allows us to do better, more accurate analytics. It allows us to build better models, all those things you would imagine. But then when you couple that to, what's the impact on the customer, it means that there's a faster time to value. So if they're shopping for a new surveillance tool and we have a tighter integration with reliable data and source of data that's clean, reliable, and that we've already worked with, customer can get up and running faster from the time they engage with us to the time they go live. They can start running models faster, which means they're detecting risk faster, which means they're just up and running, detecting risk and staying out of trouble even faster, which is always good. We also have some new capabilities we brought to market called self-development toolkit called Studio, which is really exciting. And we're allowing customers to modify and customize models And so for us, it's a huge opportunity for our customers to be able to drive more agility into their surveillance programs, go after new markets, but also to pivot and go after a new kind of risk typology that maybe they're just finding out or just wanting to go after for some reason. So having, again, that clean, reliable data just makes that process of tuning, customization, tweaking models, it makes it much simpler because within our self-development toolkit Studio, the data is a key element to testing and to customizing those models. So yeah, there's certainly a number of areas where we see that as showing up as a high impact for our customers, having that clean, reliable, and accurate data set.
Okay. Yeah, look, I need to add, I also think breadth and depth of data, is going to be very important from our standpoint, not just exchange traded markets, but OTC, cross fixed income, FX, commodities, would be necessary for effective market abuse monitoring and really looking at that correlation of trading behavior against that market rate. So this data needs to be captured, stored, and easily retrieved, years after the fact. So every tick needs to be captured and verified with accurate timestamps. Similarly, clients will also want a really logical format from a single source. So, this is some of the reasons that I think, our partnership, is looking, will be successful. Only to add on to that, Chris, is that maybe worth mentioning about sort of, overlaying this with news as well. There may be the ability to retrieve and correlate market moving news articles to corresponding trading activities with those events. So that may be something that you can be integrated into these systems. We have 500 plus venues that we look at, that we store tick history data, going back to 1996. So, across 80 million securities. So, this is where I feel that we can sort of add a valuable part to the trade surveillance, industry. Look, we're sort of getting towards time here, Chris. I think, I'll probably look to wrap it up now, given we're on time. But, do you have any concluding remarks?
Just to kind of repeat what I said at the beginning, Chris, which is, we're really excited about this partnership with Refinitiv. We think it's going to drive tremendous value in the region for our customers, our mutual customers, and our new customers. Just being able to have the combination of industry-leading data with an industry-leading holistic conduct surveillance solution. We just think bringing that together for our customers it's really an awesome partnership because we're going to be able to again cover all of the data that our customers need to do trade surveillance, and then to be able to analyze that in near real time, by the way, and then to be able to deliver that in a singular case management. I mean, it's just tremendous value for our customers, and we're just really excited about it, and looking forward to being able to get it out there and show it to all of our mutual clients.
Well said, Chris, and looking forward to working with you and the team, over the coming months and years on this. And thank you so much for joining us and your insights. For viewers of this session, if you're interested in learning more about market surveillance capabilities, then you can contact me directly on LinkedIn, or contact me on chris.young@lseg.com, chris.young@lseg.com. And look, I'll be very, very happy to pass on your queries, your questions to Chris and the wider Nice Actimize team. Thank you very much.
Thank you so much, Chris. Thanks, everybody.
Bye now.